Welcome to Insights. I'm Eric. Thanks for stopping by today. We're going to talk about the Matrix. We're going to do a short update. We're kind of watching people, I'd say glossing over these markets and not really probably doing other things in the summertime. But unfortunately, there are some important things taking place. We're going to touch a little bit on here, and we're going to talk about this persistent decoupling that's taking place. But there are other things that we're noticing as well. We've updated the special report for something that we've came across yesterday. I'm sure people who are looking through the matrix pretty astutely can probably see some of this, but if you are involved with that, I checked that out. It's something that's a little bit ahead of everything else. May not be finalized, but that's the whole idea of the special report. I do think that the stock market is an important market to be tracking in terms of concepts such as risk on and risk off, and whether or not we're going to go higher, and whether or not the trouble around the world is going to manifest itself into higher stock prices, or if we are going to come crashing lower. And we're still relatively in a situation where the market's not highly organized. It cannot be considered to be triple up or organized in a way that we're going to follow through the evolution of the trade. You've got primary trends that are down. You have some of the daily trends and weekly trends are starting to move higher. You have contravening or opposing energy builds that are supportive to the stock market. But yet we have this decoupling that's taking place, and this is nothing to just lightly ignore either. So we're going to just take a quick look at that. If you want to click any one of these links here or here inside the S&P and VIX correlation, or the term structure of the VIX, and that they're here. This is for gold and the US dollar. There's also them for the weekly trends, which are just as powerful because they're moving in the same trend and they're confirming everything we're going to see. If you click these, we're going to get these charts up here, and what you're going to notice, this is the S&P and the VIX, and we have a really high spike. This is probably one of the highest spikes that we've seen. Now, what is taking place here is that risk and price or volatility and price are not confirming one another. This could be related to some of the options activity. It could just be the fact that the invisible hand is trying to discount something that the rest or the majority has no idea about. And what it does is it generates these red columns. And red columns can be turning points. They can be turning points lower. They can be turning points higher. It's whether we jump the creek or break the ice really depends on what the overall structure of the market is. The fact that the primary trend is down and we're getting these spikes is worrisome. You could have a run up here and then a crash back down again easily because the primary trend is down. Path of least resistance is down. And this is not just a quiet spike. This is pretty meaningful. This is one of the largest spikes complex that we've seen. And it's pretty persistent. We saw it here that wanted to turn the market. Now we're seeing as the market rallies. That suggests you want to turn the market lower. Now, when you couple some of that with the conversations that we've been having in the economic reports and stocks, there's a economy and stocks report out there, but then we've also tacked on a special report because of, I think this is one of the most important discussions, in addition to a few of the individual stocks that are trading and some of the trends that are starting to flip and starting to reset. It's really whether or not this stock market can go higher or it's going to go lower. If it goes lower, it could drag down everything. It could drag down everything that is not sufficiently, what I'd say, has an opposite correlation against it, especially if some of these readings right here start to suggest a market that is going to into what they call a liquidity trap, or an illiquid market, in which then there's just no buyers and sellers and everyone's kind of standing there. The higher these cycle numbers go, the worse this problem gets. But that's a conversation outside this particular review for the matrix. I want to keep this relatively short. You can see that the spikes here, and it's not just limited to the spikes in the VIX and the S&P 500. The term structure, the short term to relative to the intermediate term and longer term VIX, it is also spiking, and it's putting up a decent size spike. And this could be something that needs to go away. I've said this for weeks now. This needs to disappear. This market needs to trend. It needs to start. This number needs to fall back down towards the baseline, and this number needs to fall back up towards its baseline or rise back up to the baseline. And then you get a market that's trending, and then you don't see these yellow highlighted box. Trading can take place in a rally, and trading can take place in a decline, and that's why this is a very important cause building. So I try and keep an eye on some of this stuff. I'd keep an eye on the S&P 500. I'd keep an eye on the reversals that are there. I would keep an eye on the lines in the sand that we've talked about, and the economy and stock report, as well as the special report, because they are going to be very important. And as you see, there's more than just a market here now. You have the NASDAQ 100 that's resetting down. But I'm not as much concerned about that as I'm seeing all these calm uh, uh, designations. Calm, 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 calm. It's all the way up and down. This market is on the stock side, or the stock grouping is highly compressed, and it's looking to jump the creek or break the ice, and a dramatic move is coming. That is what's telling us, and that's why this decoupling is extremely disturbing, and it's something to really be watching. And I would keep updated, and I would keep watching the matrix very closely over the next couple weeks, and I would keep watching those reports, and actually the special report that we have too talks about it in specific detail, especially if you're not involved with the economy one. And I am trying to talk about stuff that's really cutting edge in that one as well. So thanks for watching, and keep an eye on these, and keep an eye definitely on decoupling.